Good morning, Forex traders. It's time to do our live Forex trading webinar. We're going to do Forex pairs like Euro dollar, Pound dollar, Swissy dollar, USD yen, Pound yen, Euro yen, but we'll also do gold and oil, and really anything else you want, because you're my sweet baby. So, like I said, good morning. Welcome to the Forex.Today YouTube channel. I apologize that I'm a few minutes late. I was sitting on the back deck watching the sunrise, drinking my coffee, and then I'm like, oh my God, look at the time. I don't have a watch. Oh my God, look at the time. So anyway, sorry about that. Cool. So, things to do. First of all, thank you. Thank you for being here every day. Many of you have been here virtually every day for a decade. I've been doing these webinars about 15 years. I've been doing daily webinars. So how cool is that, right? So thank you very much for being in my life. Thank you very much for keeping me sharp and focused and inquisitive with a desire to improve as a trader. Thank you very much for being an inspiration to keep working hard. I appreciate you in my life. Thank you. Also, thank you to Traders Way for making these webinars possible and bringing them to you as our sponsors. So thank you very much to them. So please ask questions. Please get involved. And please treat your fellow traders with dignity and respect. Let me also remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Cool. Appreciate the thumbs up. I appreciate the comments you leave on the video recordings. Please do that if you can. So today let's do, like I said, yen pairs, dollar pairs, gold and oil, and then we'll have a wonderful weekend. What do you stink? Smell like a plan? One thing I guess I want to point out. This is typically, if you're a bear, something you look for. I don't think it'll drop like that. That's the news. But the pattern that you look for here, if you're a bear and you're looking to sell, first of all, you want to kick it off that 21, and then the next move is down. Okay. That's if you're a bear. You're kicking off next week's sell zone as well. So it's really a plan A. Okay, let's move. Okay. Here's another one. If you're a bear, let's kind of do it this way. So if you're a bear, remember this doesn't make you a bear, but if you are a bear, you're going to look for something like this. So right now, it doesn't look good, but that's why you drop into a small time frame and you wait for it to look good. You got your price, you just don't know your time. So how about that? Considering that you were waiting for it to do something bearish right around here, is this bearish to you? Or are you going to wait for a breach of the 2155 and have that point down? Well, for that, you'll need something like this. So if you're a bear, you're going to want to get short here, here, or here. Dean says, hi Wayne, I've been going through your bootcamp videos. The link that I put up yesterday, very useful. Everyone should watch them. I'm just at the end of part 3. Right on. Thank you, Dean. So you must have done moving averages, oscillators. What's the third one? Fibonacci? They're basically, I did a webinar many years ago it was either Vegas or New York. It was leading and lagging indicators. I think that essentially that's what those are. Chrissy watches the trading videos 3 times a day. Right on. Hey, the price is right. Can't argue that, all right, Chrissy? So if you happen to have the link available to the playlist, please post it here for people. Thank you. Appreciate it. So there's your WTI. Of course, down is not really what I want, but nobody, the market doesn't care what I want. So we have to analyze, is this market up or down? So one of the things we talked about yesterday is right now, technically, I would say it's down. But if we were above the mean, things could change, right? But right now we're not. So that's why I always do this for price action's sake. As long as we're below that, I'm a bear. Okay, if we're sort of above that, in between these two areas, I'm neutral. And then, of course, above that, I'm a bull. So I want this to go up based on macroeconomics. Meaning, not that, that if the macroeconomic situation improves, this will go up. But it's not going up, so don't force it. Ramiz, you just have to pay attention, be ready for it. It's just seasonality. But obviously the market is being depressed by I don't know, like the trade war, it's not really geopolitical, but it kind of is, isn't it? I mean, usually when you say geopolitical risk, you're talking about a war or something, but, it's a trade war. So, yeah, will that impact things? Oh, yeah. But as soon as there's a sign of a truce or agreement, the market's going to rally. Okay. Brooke says the market's very choppy this week. It's either like choppy, like nothing's happening, which is usually the case, or now it's more like this, right? But that's because there's lack of direction, but there's supposed to be a lack of direction. Okay? You know what I mean? So use your technical analysis. So if who asked the question now? Was it Manipur? So if you're waiting for this to go up soon, then that's why I use technical analysis. Okay. Now, if you didn't expect it, you would probably, let's say potentially just ignore the fact that it's turning up, even though it's been down for weeks. But if you think it's going to go up now, you can prepare and be early in the cycle because you are anticipating the change in fundamental trend. You understand that? So just the idea that you're waiting for it, like if you were saying, hey man, the third week of August, I want this to go up, and all of a sudden you get a double bottom higher high, you should have confidence taking the higher low, and boom, maybe it'll work out, maybe it won't. But at least you're going to be ready, willing, and able. RWA. Okay. Another thing that I often talk about, and I don't think I talked about it this year, is if you're expecting a fundamental change in trend and you want to trade it, then in times like July and August, you don't trade, or you don't trade much, because your strategy isn't to make pips, but it's to save pips. Like you don't want to lose pips, right? So you want to keep your powder dry. You know what dry powder is? We used to talk about this in venture capital. It's money you put aside for a future investment. Ivan says, hey, Wayne from Italy. You're changing my way of trading. Thank you. Thank you. I think, hey, I should come visit. I don't know where in Italy you are. It don't matter none. Yeah. I'd like to go all through. I probably need to do like 3 or 4 Italian trips. I have friends, I think they're actually in France now, but a friend of mine, he married an Italian woman, and he went through an IPO, and then she went through an IPO. Now they're like 39 and a half years old, retired in the south of France, so they can enjoy the nice weather, and of course her family's not far away in Italy, so they can go have their al fresco dinners with family. Like, God. Like, people do that? Yeah. Isn't that nice? He gets an IPO, she gets an IPO, quit working in their 30s. Yeah, a lot of friends of mine have done that. A lot, actually. It's really funny. All right, so anyways, I'm about to cry. I was thinking, I'm the worst of all the friends. Everyone else is retired. Yeah, 40 and still working. What a loser. All right. This one is interesting because they're both risk-off currencies and all that kind of stuff. So I don't really like to look at this, but it'd be really interesting if it did change direction. Again, I wouldn't put that into a trade, but then I would look for, I'd look for changes of direction. Right? So I wouldn't even. It's not even the coal mine I want to be in. So it's not a canary in the coal mine scenario. So here's something interesting. Is this a breach? As Cedric said, you're not a loser. I know. Thank you. I appreciate that. So are you going to treat this as a change of direction? It's interesting. What I'm looking at here is I think we have I thought this was a standard deviation measurement. And then I thought this was linear regression. And if that's true, then this linear regression is set at 2 standard deviations. Oh, standard deviation channel properties. Parameters. Deviations 1. Huh. Hang on, I want to figure this out. So what is this then? Now that's the standard deviation. Yeah, hang on. So then what is this? It's just regression, right? Ah, come on. Regression. Parameters. Doesn't really tell you anything. All right, well, this is a standard deviation measurement. And our regression channel seems to be 2 standard deviations, which is similar to the Bollinger Bands, but lacking the volatility measurement. Interesting. So are we going to treat this as a change in direction? Change in trend. I'm trying to get this back now. No, I can't grab it. Won't let me grab it. So anyways, are we going to treat this as a breach? So this is what the standard deviation is doing, was calculating highs and lows. And then our regression channel seems to be 2 standard deviations. So I don't know. We didn't know that. That's interesting. So we are beyond 1 standard deviation, which in my memory, I think is what, 68%? And 2 standard deviations is 95. Do we have any math people? I think that's right, isn't it? 68 and 95. And then 3 standard deviations, I think, is 97%. But anyways, some people, let me get back to what we were doing. Do you want to treat this as a breach? Are you now a bear? Are you bullish on CAD? Are you bearish on US dollar? Notice a couple of things. This is this week's projected high in blue, and then in pink is this month's projected high. And look what happened when we hit the cluster of weekly and monthly targets. Do you think this reversal, this head and shoulders, do you think that is just random? Chalk Ducks is 68.2 and 90%. I thought it was 95. I thought 2 standard deviations was 95. So I don't know. I guess I said it, so I think I'm right. But I'm open-minded to being wrong. So anyways, do you think that is random? And that this line right here is exactly the monthly R2? So to follow that up, now you need a trade plan. So are you going to look for maybe a shoulder here? Maybe it does this. Cedric says the market is not random, but there's entire, you are taught, how about this? You are taught the market is random. What you are taught in school is that the market is like a drunk walking home from the bars at night. He generally knows where he's going. Okay? The bar's here, his apartment building's here, and he's going to walk and stagger and eventually make his way home, but in a very random, unpredictable way. And I'm not joking. That's what's actually taught. That even with that analogy, that the markets are like a drunk. So anyways, what I'm trying to say here is, do you think this is a change in direction? Or, let me highlight it differently. We need like yet another color. Or is this going to continue? You have to make decisions. Okay. This top is not the same as this one or this one or this one. So if you believe we're heading down now, it's because of that top in that big circle. And you actually kind of knew that a couple of weeks ago. You want to know something really amazing? You ready for this? This move here gives you this target here. On the last day of June, you would have said, oh, I'm going to front run this sucker, and this is my target. On the first day, you're like, I want to buy somewhere around here. My target's going to be somewhere around here. And then I'm going to get out. Isn't that interesting, huh? So what happens today, let's say it falls further. I don't think you're a seller here. Maybe you'll take the news. But really, you're setting up the future sell. So as a bear, you want it to go up. This takes retraining because most people don't think that way when they get here. Okay. What information lets you know we're a risk-off situation? How about all stock markets around the world down? How about oil down, like downtrend, not down day, but specifically a downtrend? Those are two really good ones. Okay. Now, if the DAX is down, but the S&P 500 is up and Shanghai is sideways, no. Congruency. Shanghai is down. DAX is down. FTSE is down. S&P 500 is down. Wowzer. Not good. Okay. That's a great risk-off scenario. La 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 la. TradeTheNews.com. TradeTheNews.com. .com. What sources of information? None.
Rate for Canada in July expected 5.5%.
This is it. TradeTheNews.com and the internet.
Canada building permits.
I don't have any sources
June
of
expected
news
plus 1.0%.
and information. I mean, look, the stock markets are down. That's it. I mean, Hang on, guys.
July PPI data in just 2 seconds. PPI 0.2% is in line with expectation, but core at minus 0.1% is 0.2 lower than expected. Year over year, PPI core at 2.1% is also 0.2 lower than expected, with the headline in line at 1.7%. Canada, net change of employment
big bad news for Canada.
Plus 15,000 expected. Building permits in Canada minus.
So now we're in the sell zone I just talked about.
Plus 1% expected. Prior bias a little bit higher, minus 12.2%, but minus 13%.
We are now in next week's sell zone. Terrible, terrible news.
The unemployment rate of 5.7% is 0.2 higher than expected for July.
Terrible news across the board. They thought they were going to gain 15,000. They lost 24,000. Unemployment went up. Come on, Canada. PPI in the United States of America, as expected. Core actually dropped because of the oil price. Well, I guess that wouldn't be right. But anyways, 2.1 versus 2.3 year over year. So that's quite disappointing. Okay. Now, if you're looking to sell CAD, you should probably wait for a pullback on CAD yen. If you want to buy CAD, you need to start doing your work right now on that USD CAD. Okay? So how do you trade this? Just like any other scalp. Okay. I'm going to bust out to a Cinco. So 121.4, that almost puts us like this. But be careful. All right, head in. Let's take a look. Go back to. Okay. If it moves down, I adjust the fib. That's all. Kasande says, can we one day have a session when you mainly explain global money flow and how you gather intelligence and for? You know, we have entire training courses for that already. Just visit fxbootcamp.com. We already have that, all of that. In particular, like live.fxbootcamp.com. But yeah, you should, I mean, the easy answer is just go to every central bank website and read all the reports. They tell you all the answers. Okay. So for example, like yesterday, the Prime Minister of Australia testified and discuss the Australian economy. That would have been good to pay attention to. 2 days ago, New Zealand shocked everybody by dramatically cutting interest rates. Why? Go to the website, read the report, read the release. They tell you straight up. The trade war with China is very, very scary. They do a lot of exports to China, but, you know, China's distracted, blah, 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 blah. But just like it's all out there. Par excellente. Thank you, Jimmy. Okay, but seriously, think about taking a training course at FX Bootcamp. That's why it's there, to explain and teach you all of that. You know, like the fundamentals one is great because it teaches you about money and banking and then central banking. So like by the time you're in your third or fourth hour, you're learning how to balance or how to manage the balance sheet of a commercial bank. Because then you get to learn about the fractal nature of banking and money, the fractional nature of banking and money, and how a central bank has a relationship with a commercial bank. Because if you don't understand that, then if I just said, well, this is how the Fed does things, and you'll say, well, I don't really get it. Why does it have such an impact? So you have to, well, if you don't understand commercial banking, well, how could you possibly understand central banking? So you start there and you go through this whole process, right? So that you can learn monetary policy and theory, right? So anyways, it's all there. All right. Okay. So like I was saying here, guys, I don't want to sit in here and watch this for the next half hour. But if it drops a little further down, then you move your fib and move your target. Come on, dude. Okay. Okay. So on and so forth. But right now it's here. Oh, come on. Okay. Okay. That's true, Chuck Duck. They just straight up tell you. I like that. And the RBA has its own style too. And I've appreciated that over the years. La 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 la. Ma ma ma. Okay. So again, this is perfect for next week's trade. Kiwi CAD, both are weak. Now here's a great one, CAD Swissy. Another risk-off pair. I like to mark key prices. Okay. So for example, oops, delete. For example, like what do I mean by key price? Well, what do you think it would do if it breached that price? Go to here. What do you think it'll do here? Well, it'll respect that, but what if this is down? Okay. So let's talk about this. If this gets breached, where will it go? It'll go here. Is this support? Yes. Will it be respected? Yes. That's why it's support. If you didn't think it would be respected, you wouldn't have called it support. So other people will see it as support too. It will move the market. What will it do? Some people will take profits. Some people will go long. But if the overall trend is still down, it will not make a higher high. And in fact, it will make a lower low, and that will behave this way. So it will go down, up, sell, down, up, sell, down, up, sell, down. Miguel, this is MT4. Very cool. What did we talk about yesterday on a lot of these pairs? What do you do on Thursdays? Tell me. What do you now do on Thursdays? What do you start to do? Talk to me, Goose. Yeah. Start planning trades for next week. It's not even for next week because that sounds like you're going to wait till next week. You start planning next week's trades. So for example, you'd be a seller in here, right? And then next week's target is well below the chart here. Doesn't mean you'll get the move on Thursday or Friday. Sometimes you got to wait till Monday or Tuesday, but you're planning out next week. And very often it does move Thursday and Friday. So if you're going to go from this high to that low, let's talk about price action. Let's say that's generally what will happen next week. But how does price action work? Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 down. And then at some point you'll hit your target and you get up. So here you go. Let's do it again. Your general plan is here to here. Oh, mouse died. Come on, Bubba. Let's do that over again. Okay, there's your strategy, your plan. So let's talk about tactics now. Down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 take profit, done. Hey! That's how you roll. Okay. Just predicted the future. That's what your job is. Okay. Now we're talking about the swing trading course, which I suppose I got to set that up so you guys can. Is everyone ready to start up the swing trading group? I guess we're probably a week away. Wow, I guess I really got to do that. Like, I got to set it up this weekend, I guess. Remember to get into the group, you have to have completed the swing trading course. and then you can join sort of the swing trading mastermind group. So we don't teach, we do. RJ's ready? All right, it's going to be me and RJ. Now, the cool thing about the swing trading group is we meet Fridays to set up Monday's trades. Cool, just me and Ron. Right on, Ron. And I run so far away. Cool, right on, Sharif. Is it next week? It's coming up fast. I don't know if it's in 1 week or 2 weeks. I hope it's 2 weeks. I'm thinking 2 weeks. I don't know if I can pull it all together in 1 week. And how long does it last? It's like 12 weeks, right? Sometimes 15 weeks. Okay. USD CAD still up. But remember, this is next week's sell zone if you want to buy CAD. So really, it comes down to your bias. Ernest is going through the coaching. Right on. Miguel, the first thing you have to do is complete the swing trading course at FX Bootcamp. I'm going to send an email out to those who have completed the course. What most people do is they do the all course bundle, and then they complete it, and then I create an email list of people that have completed the course, and I send out an email. And I rant. Hey, Marina, do you want to the help with the if I do a Cape Town conference? So I'm watching this. Remember, guys, if you were a bear, oops, I wanted to draw this. If you were a bear, this is interesting. Okay, that means you want to buy CAD, even though CAD just got weak, but CAD was strong. And I said, we need it to get weak before you can buy it. So, right? When are you coming? I don't have anything set in stone, but I'm thinking second week of January, like, I don't know, let's pick a number, January 10. I don't know what day that is, but something like that. And we got to get Ryan on board, confirm that. I'm thinking David Pegler and I have talked about it, and he wants to do it. And me. And we do, let's say, a couple of days of trading, but a nice VIP dinner somewhere, some nice Cape Town time. That's what I'm thinking anyways. All right. So, see, it stopped right at our line. So, on a small time frame, are you looking, if you're, again, you have to be a bear, but are you looking for this? And you say, well, on this 15-minute time frame, it doesn't look very bearish. I'm like, yeah, okay, well, let's take a different look. Okay, it looks pretty bullish here, but has anything changed, I guess, is what we're talking, right? So at some point, this might change direction, right? This is a key point that might change direction. So that's part of the hypotheses. And now you use technical analysis to confirm or deny the hypotheses. And the hypothesis is if it reversed, then it would look like this. And we're at that price now. Okay. Look at the price we're at now. Watch this. Huh. Relay. See? Huh? Doesn't it look like there might be something there? We don't know. But if it happened, it would happen like that. Now, we'd need an improvement in global macroeconomics, one would think. And you would think that oil would be up. Okay, not necessarily, but that's what you would think. So Carlos says, yeah, that looks like something. Yeah, we don't know if it'll happen, of course. I'm not saying it will happen, but if it does happen, it'll happen that way, and therefore I can prepare for it. Now, where do you think oil is going to be in a week? What did I tell you yesterday? Start planning for next week. And I said, hey, this looks interesting. It's a bottom and it's a monthly S. Could be ginormous support, right? So now what? Well, what if it does this? Is that plausible? Of course it's plausible. What else is in our way? Well, let's, we can mark that, we can mark that, and we probably should mark that, and we should probably mark that, and we should probably mark that. So how does that work then? And I ran so far away. All the way, well, I don't think we'll hit the top, but anyways. If you thought that would happen, that's how you would plan it. And then, of course, if that is happening on crude, then your USD CAD would be doing this. Or your CAD yen would be doing, or your CAD yen, come on, Baba. Or your CAD yen would be doing this, right? USD CAD, CAD yen, or CAD Swissy. Okay? So this is why we're not chasing price of what's happening now. We're already like next week, bro. Like to react to news and say, oh, now I'm bearish on CAD. Now, that's finally got you in the game. You should already be in the game and you should be preparing for the next round. You know what I'm talking about? Little news came out, right? Some volatility came with some news. Oh, it moved 28 pips. It moved 28 pips. Yeah, great. Yeah. Cool. So anyways, wonder what this is going to do. What do you think? Is this an important area? Is this dropping to 40 bucks? That's all you have to think. Are we on our way to 40 bucks a barrel? It's a yes or no question. If the answer is no, then we're at a bottom. You're like, no, we're not on our way to 40, so 50 should hold. Cool. Right on. We're about there now. Generally, that's true, Ramiz. Ramiz says, hey, when you consider news high and volatility trade, after it's done, does the market resume the usual cadence? Well, what is actually moving the trend? What is the trend? What is the trend based on? Not news, but central banking. That's what creates the trend. So if the trend is down and we had some news, unless the central banking policy is expected to change, it will go back into the trend. So some of you guys are answering the question, are we going to go to 40 or not? Some people are like, hey, man, yeah, if it did, that'd be really something. Well, it's not if they did. What is your opinion? Don't worry, you can be wrong because you'll know you're wrong because you breached 50 bucks, right, on 40. But right now, our hypothesis is if you don't think it will, then this is a buy zone. Okay? If you think you're on your way to 40, then you still need it to go up. Oops, let's do it this way. But you're right, it still should bounce at support. Why? Well, it's support. If you see it as support, it will be a support. Well, then your trade plan is that. Okay? The cool thing is if you think the support will hold around 50 and you drop to 47, well, you were wrong. So stop. Stop buying. Of course, you wouldn't buy a lower low. I mean, again, who buys lower lows? Poor people. I used to be a currency trader. That's a tough racket. Yeah, I bought every low on the way down. Chuck Duck says, well, with the further rate cut, maybe. So we really have to decide what's going on at the Fed. And this is not an easy one. Is this a total global meltdown? Or is it an adjustment for the national economy? Now, the economy is at full employment with approximately 2% GDP. With 1.5% inflation. Shoot, that's actually great. So like if the entire global economy was in a meltdown and the Fed was cutting interest rates, the US dollar would get strong. I want you to understand that. You're going to probably find that confusing. But the reserve currency typically gets stronger as interest rates get cut. And that's particularly true if it's a global crisis. Okay? If money is being pulled out of an economy somewhere around the world, I'll pick on Malaysia. If billionaires in Malaysia are withdrawing their money because they don't trust their banking system, or they don't trust their government, or they don't trust the economy, like maybe inflation goes up or something, but they're like, they want to remove the money from Malaysia for Malaysia reasons, and maybe it has to do with trading with their partners and all that kind of stuff. But if they decide, oh my God, I got to get my money out of Malaysia, and they send it to the United States and buy a bunch of 10-year T-notes, hey, 10-year T-note Pays 1.7 today. That's pretty terrible. But anyways, they move it to the U.S. banking system. And to do that, they need to convert the currency into U.S. dollars. And therefore, the dollar gets strong because the rest of the world is weak. And maybe even the U.S. economy is weak. Okay? Now, if the Fed is if the Fed's cutting interest rates and we're not in a scenario like that, like, I don't know, it's a really strange thing. I've been around a while. I don't remember the Fed cutting interest rates at full employment before. Okay? I've never seen it. So the Fed must have made a mistake and raised way too high. I think what's happening, though, is they're accommodating for the trade war. So the Fed, cuts 75 basis points this year, and then next year, right before the election or going into the election season, Trump signs a deal with China. Then what? The economy booms. The stock market skyrockets. Trump gets reelected. And then Powell starts raising interest rates. Cool. And then what happens to the dollar? The dollar weakens. Then you need more dollars to buy everything because the purchasing power of the dollar would diminish. And that has to do with global trade. So the dollar weakens. Everything costs more because the dollar buys less, so you need more dollars to buy the same thing. So this cigar goes from $20 to $30. A barrel of oil goes from $50 to $100. And we start getting the inflation that we've been trying to create and that the rest of the world's been trying to create but hasn't been successful at it. Okay, so generally, when it comes to just the reserve currency, when things are good, the currency is weak. When things are bad, the currency is strong. But when you're doing economics, there's like a closed economy versus an open economy. There's one that trades, right? International economy versus one that is just a domestic economy. All these things matter. So it's to the degree that that the move in U.S. Treasuries is a global phenomenon. Who is buying the U.S. Treasuries? Interest rates on the 10-year T-note were like 1.5. Then they went to 2.0 for a very long time. Then they went to 2.5. Then they went to 3.2, I think was the high. Then it went to 2.8, 2.5, 2.2, 2.0. Now we're back to 1.7. So who is moving these rates? If it's the Fed doing it, the US dollar won't change value. If it's foreign buyers, we'll say international buyers moving these rates, then the dollar will change. And in fact, it will get strong. So you have to ask yourself, who is moving the market? It matters. Okay? Sharif says, hey, Wayne, I've been seeing headlines that the UK is 1 quarter away from a recession. Well, typically, you only need 2 negative quarters to get a recession. So we're always 2 away. So if you have 1 quarter of negative GDP, then you're only 1 way away, right? So it's easy to fix that, though. Just do Brexit properly. Nothing wrong with the UK economy. Before Brexit, I was very, very bullish on the UK economy. We just got an IMF report, not only confirming the health of the economy, but reaffirming the health of the economy and increasing the future outlook for growth. We were very bullish. This is around the U.S. taper tantrum time. And it was great. We timed everything around the IMF report and all that kind of stuff. It was fantastic. And then Brexit. Wah, wah, wah. Okay. Huh. Well, that's that. So when they fix Brexit, pachow, it should be right back to where it was. Okay. Oh, is that right? Yeah, let me go back. Was it here or was it on the CAD window? It was on the CAD window, wasn't it? CAD scan. What's up, BM? Where did I have it? Was it on the news scan? I don't remember where it was, but we had it. We had it some way. I can't remember. Wasn't this the trade plan? I have it drawn somewhere, but how do you remember it? Something like that? Did I get that right? Now, I want to remind you that that plan was designed before the news came out, before the green candle. Because news just sets up a proper trade. PS says it already dropped 35 pips. Yeah, you're welcome. Well, it wasn't CAD yen because we were talking about oil needing to go up. Oh, really? All right, maybe my bad. Yeah. Oh, I see. That the smaller scalp. Okay. I thought we needed, because I want CAD to go up. But anyways, I don't even know where it was anymore. So then it was just a short-term scalp. I don't even have it on my chart, so yeah, weird. All right, well, whatever. What am I doing this weekend? I am going to a concert, and I'm probably going to spend a big chunk of the weekend setting up the swing trading group. Sergey wants to learn how to trade. All right, have you subscribed? Sergey Temi, have you subscribed? Okay, so let's do some gold here. Cool. Waiting for that 4-hour 21 to catch up to your channel. Yes. Yes. Yep. 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 Mm-hmm. Yep. 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 To the YouTube channel. Yep. Bum 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 ba bum. Tricky, tricky, tricky. And I ran. I ran so far away. Can't believe the time already. So one thing to look at is all the end pairs together and determine if it's still a complete risk off. And for that, you need to see congruency, meaning all the end pairs are down. Now, if some, Sergey says, so how can I learn from you? So you already subscribed, you come here every day. The other thing to do is you go to fxbootcamp.com and pay money. You put money in, knowledge comes up. It's that easy. There's not much else I can do to help. All right. Are these all straight down? Well, let's double check 4 hour, 1 hour, 1 hour. So make sure we got congruency on time. 4 hour and 15 minutes. So that should be 4 hour. Okay. Pound yen straight down, hit support, may have stopped. Let's put some more time here. Straight down and bounced. These are not the same. straight down and bounced. These two are the same. Straight down, bounced. I'd say these three are the same. Straight down, bounced at a logical pivot. So notice the commodity currencies have blown through the monthly targets. The European currencies have respected the monthly targets. Cool. And the two European currencies seem much more like each other than the commodities. So there's really two things going on here, the commodity currencies and the European currencies. Definitely risk off here. The European currencies are much weaker, and the commodity currencies are trying to hang in there. They're trying to hang in, right? So this one is thinking about dropping off the 4-hour 21. This one's thinking about dropping off the 4-hour 21. Aussie's trying to get through it. So it'll be very interesting to see if these breach the 21, it's the first sign of potential reversal up. Yeah, I would think so, Russ. Why do I think the pound will assume the high? When did I say that? When did I say anything like that? I said when we were at 148 that the target was 131. I'm sorry, that was here. Okay. So I'm sorry I went a little further, but I was doing this 3 weeks ago when that was the zone. This is the zone now, and we've hit that at 128 and it's stopped. But I was shooting so far in advance that this area was 131 because I was doing that while we were here. So that doesn't seem like up at all. You wake up the morning and you sell the pound because of Brexit. There's no other discussion, right? Hey, hey, hey. By the way, it's with an E. It's hey. Okay. So anyway, so I don't remember up or something. Okay. But this is a very logical target. And what's most likely to happen is you get some sort of opportunity like that. Do you come online daily? Yes. Subscribe and you will be notified. If you don't get YouTube notifications, follow me on Twitter. I send out notifications every time I go online. That's twitter.com/FXBootcamp. At FXBootcamp. Okay. Hey, crypto, how long have you been trading cryptocurrencies? Pound dollar? All right. Well, let's try some pound dollar. It'd be the same. It just now depends on what the dollar's doing, right? Let's see. Down. Do I use pin bars? I don't think so. So Forex student, we planned out pound dollar a couple of days ago to head down. Okay. You should see, like, it shouldn't take you very long, like literally a second, that the trade plan for this week was this, and the trade plan for next week is this. So it's a bit of an inside week, which means as we're tiptoeing along the bottom of the regression channel, the slope or the velocity of the market is slowing, if you will. Okay. Hey, Wicks, don't lie. You're welcome here. I just want to make sure you're not poaching viewers. I just want to say it once. You're welcome to hang. Make sure you're not poaching viewers, okay? So let's flip here. Let's move on. I want to see if some of this news has come through. Okay. Let's get off the yen. Remember, we're looking for congruency against all the yens, and that's where you identify whether it's across the board risk on, risk off, or if it's something different. No, I know. Hey, I only need to say it once. You know what I'm talking about, though, right? So, okay. Look at that nice move on oil that we've been hoping for since, was it Wednesday? Nice. So let me redraw. I think I'd already did this today, but let's redraw it. Okay, these are the areas that I'm kind of eyeballing. I think it'd be more like that. So these are the levels that I'm eyeballing, okay, for a change of direction. So if we're going to get this to continue, it'll go into this zone, drop down, okay, move up into here next week, probably get to the top around Wednesday, back down, roll reversal, and then on Thursday you're setting up the week after trade plans, right? Does that make sense? Francis, I'm punchable. Really? You talking about me? Yeah, well, it's more of a macro view, right? So I'm using WTI to confirm or deny a macro point of view. And so as WTI comes down, obviously that's bearish for macroeconomics. But I'm hoping, because if this keeps falling and falling and falling, it means the entire world is stuck in desperate poverty. So I don't want that, right? And of course, support is support is support is support, right? So clearly that's support. And what I was showing earlier is the other thought process is, you have to have an opinion. Is this going to 40? Is this going to 30? And if you don't believe oil's falling that far, then this $50, it's not even 50, it's just above 50, is your support area. So that goes into a trade plan, right? So now you take a trade plan, you got a left side and you got a right side, but this is the projected low for the month of August. On top of that, right? On top of that. So if it were to reverse, it would need to reverse here. Otherwise, it's going to 40 or 30. And if you don't think that, well, then this is your support. Confirmed, not just with price action, but confirmed with market forces, and that's through pivots, right? So if it were to head up, it would head up here. And so that's something that we talked about a week ago, and all of a sudden, pa-chow, look, nice. Well, that's something that you'd want to see off of a double bottom. Now, there's still resistance here. So it will come down, and then if you're still a bull, it will come up. Because now we got to breach resistance and make higher highs and higher lows. So again, we don't know if it's going to reverse, but that's where people's bias comes in, followed by the use of technical analysis to confirm or deny your hypotheses, and then using price action and other forms of technical analysis to get yourself into your strategy. The strategy meaning macro should push WTI up. Oh, cool. Nice, right? Now, the nice thing about having a trade plan is if this just now hits here. So let's say you're a bear. Here's what a bear would do. So first of all, a bear is going to take it from 54 to 50 and then below, right? So a bear would sell right here. If I were me, I would sell. That's my plan A. And my plan B is a little higher, but I don't really want it to go there. So I'm just going to have a plan A here. The reason this is important to think both sides is because if this is my plan A as a bear, and it fails because bulls do this next week, how do I feel as a bear? Do I want to sell higher here? Do I want to sell higher here? My plan B is probably way, way up here. So that gives me as a bull, I can go M2, M4, right? M2, M4 next week. And the bears getting out of the market would probably accelerate that pretty quickly. Okay, so I'd know right away if I'm a bull that's going to work. And you might get this first, and then bears will challenge the top of the channel because that's what bears do. Okay, so this point that we're at now psychologically is very important to both bulls and bears, so it will be respected. You know what I mean? Does that make sense? So we're back to the mean from going back to the end of June. So let's say from all of July to now. So it's actually end of June to the beginning of August. We're at the average price right here. So it's important. Are we going to go above average or are we going to go below average? Even just statistically, you know what I mean? That's going to be important as well. Your bias determines what you're going to do. So I don't know what your bias is. It doesn't even matter what your bias is. You have one. If you're a bear, you're going to drop into a small time frame and take this down. If you're a bull, you want it to come down or up, one or the other. So maybe a bull would think this. Technically, that's very unlikely to happen. So really what a bull wants is down and then up. Aha! Neat, right? Beep. 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 And here, yeah. Nice. Look at that now, huh? Gorgeous. Oh, for sure. So this is next week's trade, guys. I don't even care about this on this time frame. Let's go back. I don't even care about that. Even though we just created this trade plan, I don't care about that. Okay? The idea now is to stay in your actual target, okay? Your actual target, conservative target, is, we'll just say 131-ish. Okay? 131-ish. Oh, nice. That's good because that's good for global macroeconomics. That means oil up. That means dollar down. Once again, dollar down is good, not bad. Don't think of it as that way. Okay? The reason it's good is thinking about Americans spending money. Okay? 70% of the U.S. economy is services, not manufacturing. So where do Americans get their junk? Foreigners. So to buy their junk, they trade their U.S. dollars for other currencies. So when the economy is good in the United States of America, they spread their money around the world. They send money to China. They send money to Germany, right? They send money to Korea, for example, right? Now all that money goes out, and in return for the money, we get stuff. So when things are good, when Americans are filthy, stinking rich, the dollar's weak. So weak dollar is good. Now, it's really confusing when you hear politicians whining and stuff about the weak dollar. I'm like, yeah? Why don't you whine and complain about the debt? But the weak dollar? What's wrong with the weak dollar? Gold. I thought I did gold, but okay. Oh, I looked at it, didn't say anything. Yeah, it's top-ish. If I were me for next week, I would do this if I were me. Okay. But that looks like an old trade plan, too. Didn't we have something like that earlier? That seems like we already did that, but it seemed like a long time ago. Oh, it was this. It was this one. Yeah, you guys remember that? We were back here. I guess it was 2 weeks ago. I had it this way. Am I right? Trapped. Let me do it in blue. We had it trapped in here, but it was the higher high that set it up. This higher high here. Is that right? Can anyone confirm that? Oh, is that right, Anna? Cool. Well, that's the cool thing about analysis. Like, I don't have opinions. Okay, my opinions are strategies, right? So I come up with an opinion, and then I confirm or deny that hypothesis, right? It's not an opinion, or whatever your asset class is, you have an opinion. So imagine, again, you meet with a client for your hedge fund, and the client says, hey, so what do you do with my money? And you're like, I really don't know. Every day I kind of wing it. It really depends on which way my 5-8 cross is pointing. It scares people away. But if you say, well, there's a lot of bad news that the media is reporting around the world, and there is slower growth, in particular in Europe. But that is a self-inflicted wound, right? The European Central Bank and all their countries in the European Union have had 10 years to fix their problems, but they've chosen not to fix their problems. And Brexit, that was a choice of the people. It's not an economic policy, right? So like all of that is self-inflicted. So that's going to slow global growth down. But what if they actually fix those things, right? And then how are things going in the United States? Oh, they're red hot in the United States, right? So my opinion is this is what will likely happen over the next 6 months, over the next 12 months, over the next 24 months. And when you explain that to a potential client, they say, oh, well, I might have a spot for you in my portfolio of investments, or I might not. Great. But if you're like, I don't know what I do, I just wing it, you're never going to have a client. So the confirmation or denial of your hypotheses is through the use of technical analysis. But if you don't know what you're doing tomorrow, like look, today we set up probably 5 trades for next week. And half of those we set up yesterday. That's how you trade. What's happening now is just a timing issue of will you get the price you want? First of all, that's a yes or no. We don't know. Will you get the price you want? If you want to sell, will you get the right price? Or if you want to buy, will you get the opportunity to buy at that price? You don't know. That's why you have charts. And then when you get to that price, is the market moving or starting to move in the direction of your bias? To say it differently, if you're opinionated and you want to buy this asset and the price has fallen for a day or two, is it starting to move back up? Then you buy. But that's all technical analysis does. So it's very factual. On this time frame, this market is up. That's it. Not my opinion. That is still bullish. And you say, oh, well, what about the bearish engulfing candle and the big cross? And you're like, okay, yeah. Well, this is a dynamic level of support. Statistically speaking, that'll probably hold it back up. Also, this is a level of support. Statistically speaking, that'll probably hold it up. This is a level of support. Statistically speaking, that will probably hold it up. What else? Well, the next level is way down here. So right now, that's all I got. Statistically speaking, this will be supportive. Statistically speaking, that will be supportive. Statistically speaking, that will be supportive. So, should I sell? Technically speaking, that is up. So, here's what my trade plan would be if I were me. So, what happens if it comes down here? Holy crap. Well, the next level of support's not way down here, so I should probably take a break. Probably walk away. And in fact, what would likely happen is we head up and then down. So maybe I sell it here. But until then, none of that exists. See, I don't have an opinion. Okay? I don't have an opinion. If you do technical analysis properly, it's not an opinion. Your opinion is your strategy. Okay? That's your bias. Technical analysis, that's tactics. Okay? There's one right way to kick a door down. The way your commanding officer has taught you, right? And this is so like next week, right? Well, we don't know when. You're asking me a time. So what if it's today? So if you get near your price, what's your price? See the logic here? What's your price? Well, this is moving up and this is moving down. They might collide somewhere around here. And then here's a price here you might be interested in. And here's a price you might be interested in. So we could just combine the whole thing and say somewhere in there you might want to buy. So check this out, Anna. You ready? Wait for it. You get off the 4 hour and you say, maybe around here on this chart, I'll start I'll wait for this to go up. So technically speaking, on the 15-minute chart, we are neutral. The bulls and bears agree on the price of gold. George is swearing. I don't use Elliott Wave, George, so don't get too strong. Okay. By the way, was it predictable that people would take profit at $1,500 an ounce? I mean, come on, right? Hey, George, do you use Elliott Wave? I certainly don't. I'm an entrepreneur, so I don't like rules, right? I don't like rules. I like understanding. I like improving. I can't, my personality doesn't count waves. I can't count waves. And I don't think like now there must be a 3-wave correction. I don't get it. And I can certainly not lose money and say, oh, well, I didn't get my wave count right. It must have been a 4-wave, not a C wave. And like, oh my God, are you joking? I just can't do it. It's not I don't disagree with it. I think there's a lot of validity to it, but it doesn't fit my personality. It just doesn't. Okay? I just can't bring myself to do it. Any other questions? Psychological level at 1,500. Yeah, Tova, I just said it. I said, how many people? No, I said, was it predictable people would take profit at 1,500? And the answer is, of course. I mean, you would have known that. I mean, it's a psych level. You would have known that 3 months ago. You don't know if you're going there, but you know people are going to take profit there, for sure. FS Focus says, keep it simple. Sure. I find what I do very, very, very simplified. Very simplified. But I can get it dumber, for sure. Like, that's all I need. I need market. I need a leading indicator for market, and I need a leading indicator for price. So I got price action and pivot points. I don't need oscillators and moving averages and wave counters and all that kind of stuff. Don't need them. Not interested. Yeah, I didn't say being short is wrong. What I'm saying is I wouldn't short now. And then if I analyze this as an uptrend, on the long run, I mean over the course of a year, over the course of a decade, over the course of the rest of your life, when you analyze your aggregate trading data, you will do better trading in the direction of the trend. And you will, if you are a counter trend trader, I doubt it's going to work out well for you. Now, can you counter trend? Yes. And where does counter trend trading do best? When you predict an entire reversal. So you say, this is going to reverse at $1,500 an ounce. Okay, I get that. That's your strategy. That's your bias. Cool. I'm good with that. The only way you're going to make serious money is if you reverse the entire market. I would rather wait for you to make the lower low for me, and then I sell here or I sell here. Most likely here. Okay? So go ahead and reverse the market for me. By skipping this whole area, I remove a ton of risk. Also, because I keep trading in the direction of the trend and not against the trend, what you'll find is I didn't short here, I didn't short here, I didn't short here. Okay. So in that case, what actually happened? A bear probably, let's say at best broke even, at best broke even, at best broke even, or lost money, lost money, lost money. And my style of trading would be, okay, buy here, buy here, buy here. Wait. I got this wrong. Buy here, buy here, buy here. Okay. And now we're a little concerned, but I'm thinking about buying here. Okay. If this one's wrong, that's where I lose money. I lose money once. Okay. Versus more and more and more. So over the course of time, at least in my own trading, I prefer to be a trend trader. And I find for some reason the human mind is better at counter trending, but I don't think your results are going to be better. Some people can, some people do, but again, the strategy of a counter trend is to picking tops and picking bottoms. And let me tell you, a strategy based on picking bottoms stinks. Think about that for a while. Boy, I'm slouching today. Sorry. Stupid chair. No, that's where moving averages come in. Carlos says humans are contrarian by nature. Yeah, I mean, I've seen it in people's, I've mentored a lot of people, and very often some people, for example, I'll take it to the extreme. Some people can only stand in front of the freight train. I don't know why. They don't know why. No matter how hard you train them, no matter how many resources you give them, they stand in front of the freight train. Instead of just hopping alongside the train and maybe jumping on and riding the train, they stand on the train tracks and they're like, it's going to stop. 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 And it never ends well. Rarely. It rarely ends well. Well, the thing is, I think the idea is that if you're beating the market and you're right at the top, you sold at the very, very top, or you bought at the very, very bottom. And I've learned over the years, I don't really care anymore. I know where things are likely to happen. Let's say 1500 is actually a place it's likely to happen. I'm not going to bet on it. But if it makes a lower low, lower high, lower low, lower high, I know what to do. Okay? I know what to do. I'll get it over here. Someone will sell it here. I'll sell it there. So you're in $50 before me. Good job, bro. But I was a buyer here. 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 And then in here, I stopped buying. And now I'm a seller here. And I'm a seller here. And so you're in more. I'll get better trades and make more money. That's all. Let it reverse, then trade the reversal. I don't anticipate. Well, I can anticipate the reversal, but I don't trade the change in trend until it's happened. And then I change my strategy. Or I walk away and just say, I'm going to buy it back down here. Okay? And so you get your 3-wave correction, and then off it goes again if you're an Elliott wave person, right? So I don't know if an Elliott, a 1, 2, 3, 4, 5, 3-wave correction, and then back up. Great. So I always have that as a prerogative where I'm like, you know what, I'm just going to take a break. I'm going to mark the old resistance. So somewhere around there would be my new support. So, I bought it, let's say, this dip, and this dip, and I'll just wait for it to come back to that area, and then I'll start buying it again. Because I might be a bull, I might be a bull, I might be a bull, I might be a bull. Okay. Carlos is answering Anna's question. I don't know what Anna's question is, but yes, the foundation of what I do is price action. Okay, this gives me price and pivot points. This gives me market. Okay, now there are two different things, and those are leading. Okay, now check this out. Let me go back to my standard template that I've been using for more than 15 years. Not this one. Okay. So on here I use two oscillators. I slow the MACD down and I speed the stochastics up. Why? This gives me overbought and oversold conditions for the market. This gives me overbought and oversold conditions for price. So you notice how I use price action and pivot points to separate price action from price from market. I'm using oscillators to separate price from market. Also, the 2155 gives me the speed of the market. And the 5.8 tells me the momentum of price. Once again, I'm using oscillators to separate market from price. I'm using oscillator to separate market from price. I'm using leading indicators like price action and pivot points to separate market from price. You see? The reason for this, and this might be your aha moment, guys, when the market is trending up, I want to buy when price starts rising. I buy dips. I buy dips here. I buy dips here. So all these things tell me the market is up. That's it. So now I need to buy low. We know that when price starts to rise up. Price, market. Price. Okay, first there's the dip, and then there's the up. The dip and the up. So an oscillator can help me. Moving averages can help me. Price action can help me. But I want to buy dips when price starts going up in a rising market. I want to sell rallies when price starts to fall when the market is bearish. I'm a trend trader. I'm a trend trader. Now it sounds easy, right? Well, then why are you complicating things? Now, a lot of people heckle me and they're like, Wayne, look at your chart. Look at your chart, man. It's so complicated. Well, take out what you don't need. The other thing I get heckled, what kind of loser has so many screens? He's such an idiot. I can trade profitably with only one or two screens, but this guy's a moron. Like, dude, it's only money. Like, calm down. Like, gee, criminy. So I bought screens. Like, get over it. What kind of loser drives a Ferrari? It gets terrible gas mileage. It costs way too much to maintain. It has no storage space. Why do you have a Ferrari? I can drive to work with my Toyota Corolla. I don't need a Ferrari. What kind of loser drives a Ferrari? Like, it's funny. Yeah, there's a video where I give a tour of my chart setup. I have to do a new one, but there's like hundreds and hundreds and hundreds of people commenting about what a loser I must be. I'm like, really? Holy smokes. So angry. So angry. Now my mother's read all those comments and I feel so bad. Hey, any more questions? I'm here. We're coming up to hour number 2. Yeah, PS, that's enough. These are 43s. How can I help, guys? It's a Friday. It's a weekend. Ah? What's on your mind? What do you want to talk about? Right on, TBM. Thank you, Cobbs. I appreciate that. Depends on what you mean by fractals. So let me give you the honest answer. I'm self-taught. And so there's a lot of different, I talk about things like fractal geometry and stuff, but I believe fractal geo. I believe fractals is different from my definition of fractal. Okay. I think there's a system and a strategy and all that kind of stuff. I wasn't smart enough to figure that out. I looked at things like frequency and which had to do with, so I started studying Fibonacci, and then I noticed things did like a 618, then they did like a 382, then they did a 50%, then they did a 618, then they did a 786. So I called that frequency, like an oscillator going from long waves to smaller waves. Turns out that's what Elliott wave is. So I figured out Elliott wave on my own. I know it sounds arrogant, but I did. So then I looked at how the 4-hour and the 1 hour and the 15-minute work together. So if you play around with my moving averages and you spend some time thinking about it, you will say, oh my God, he's really done something actually mathematically very interesting. And that this moving average is that moving average on a different time frame, and that moving average is a different average on yet another moving average, and like, oh, the moving averages are the same, are different moving averages, but they all agree on different time frames. Oh my God! And that, to me, was fractal geometry. Okay, and fractal geometry means like if you, all data is carried inside of every pixel. So like I realized, and maybe it's from my time when I used to work at NASA or something, but I realized that we have a price time continuum, sort of like a space-time continuum, and that price and time is always the same. What time is it right now, and what is the price of gold? That's the price of gold. And time right now is right now, no matter what chart you're on. So every chart contains all information. And I'm like, well, that's like fractal geometry. You know what I mean? So now if you go to like insert, I don't know if it's even here, but there's probably some fractal indicator. I don't even know. I think you're asking me a very specific question, And the honest answer is I have no idea. I don't know if they're. I've seen them on. I've had a lot of trading platforms over the years, so I don't know. But I think you're asking me a very specific question, and I'm self-taught, so I found a couple of hundred things that didn't work. And then over the time of finding a couple of hundred things that didn't work, I found 5 or 6 or 7 things that did work, and I started keeping those things. And then suddenly I got to a level of comfort where I never needed anything else. So we did this yesterday, guys, and I don't know if you're new to the channel or not, but we pulled up YouTube videos that I did in 2006 on YouTube 13 years ago. And I trade the same way with the same tools. So I haven't changed, and I haven't needed to change. And maybe I think that should give you some level of comfort that this isn't sort of like the strategy of the week and, stuff like that. I for a minimum of 13 years, I haven't changed my strategy. I trade the same way. Amazing, right? So fractals, don't know anything. Don't know nothing about that. Well, yeah, I used to work at NASA. So I worked 2 summers at NASA. I was planning on being an astronaut. I used to fly simulators. I was an aviation research assistant. I had passed the FAA ground tests. I don't have a pilot's license, but I was going to fly for the Navy. I was interviewed by every branch of the military, every single one of them. They all wined me and dined me, drove me around in cars and stuff. I had to take a lot of testing, so they would drive me around in cars and take me to the testing facilities, put me up in hotels and buy me dinner and all that kind of stuff. And I got, Top Gun qualified, if you will. The Navy gave me the best offer. It was awesome. So I signed the paperwork. I mean, I was in the office, the recruitment office and everything, signed all the paperwork. After 2 years of working at NASA, right? I'm on my way to be a pilot in the Navy and then go on to be an astronaut. So I joined the U.S. military, which is pretty amazing because I'm Canadian. And my first day, I go into medical testing, and this is to make, they test your hearing. I had fantastic hearing. They test my eyes. I have fantastic sight, or I used to anyways. Look at these classes. And we went through all these different things because I had already passed all the written tests, and let me tell you, they were ridiculously hard. So I passed all these tests, and then they get to one near the end of the testing, and they said, pee in the cup. And I failed. So they said, sit down on that bench. So I sat there for hours and hours and hours. And then they came back and they're like, pee in the cup. So I peed in the cup again. The doctor came out, wrote something on my clipboard and said, red line. So I followed the red line to a counselor's office. And he said, you're out. Diabetic tendencies. I said, does that mean I'm not going to fly airplanes? He said, son, I wouldn't give you a rifle, yet alone a $200 million airplane. And that was it. That was the end of my career. So I thought about it on the subway ride home. They didn't even drive me home. On the subway home, I said, well, I've always wanted to be a businessman, so I'll go back to that. That was it. A few years later, I'm on the board of directors in New York City with George Soros. Then I became a venture capitalist. And then I became a Forex trader. There's my entire life. Neat, huh? Neat. So there's gold. Oh, USD CAD, this is what we did before the news. And then if you zoom in, you can see the news, up, down. So now it's the moment of truth, right? But like I said, this is actually not today's trade. It's next week's trade. Okay. Okay, Ewan? And Russell? Yeah, yeah. Yeah, I thought I had to... I thought I had it somewhere around here. Let's see. Oh yeah, you might like this. All right. All right, here's the annual report. You're going to laugh at me though, because I was a child in 1995, but I found this the other day. Okay. George Soros. This is the annual report, right? Annual report. So these are the board members. Dave Faziano, chairman of American Marketing Association, chief executive of Arthur Andersen, and hang on. And where am I? I ran the western region of the United States. Oliver Crom, head of Dale Carnegie, George Soros. Huh? So anyways, annual report. So that was 1995. Huh? Not bad, right? Still got it. Oh, check this out. I ran a company. You guys remember Inc. magazine? They actually mailed this to me. I was so excited. This was the first time. So Inc. magazine, a hot startup issue. I was featured in Inc. magazine's hot startup issue. July 1999. Now, I'll tell you what. I remember I went to my favorite coffee shop, and it had a magazine stand. And I went to that coffee shop, and they had the magazine on the shelf. And I bought the magazine, sat down in my favorite coffee shop, and read the article about me. And I'm like, oh my So I bought like 9 copies. And then Inc. Magazine sent that one to me with the symbol on it. You were featured. I'm like, oh my God. But that was 1999. So I was doing stuff way, way, way before Forex. Way before Forex. Very interesting stuff. So Forex is my second career. So anyways, it's just neat, right? So I got a whole bunch of like newspaper, magazine articles all stuffed away in my archive. Right? Isn't that neat? Okay, what is speculative sentiment index? I don't use that one, but I bet you it's a sentiment index. And the other one is COT. We're going to do COT on Monday. So please come here Monday for Monday's webinar, and we are going to go through the Forex.Today Commitment to Traders report, and I'll explain how that works. Okay? You had the same haircut as me, and I did. Yeah, it was so funny. My very, very first board meeting, I remember I was so excited. It was on Wall Street at the Sherman and Sterling offices. I was really super excited. I'm like, oh my God, it's on Wall Street, my first board meeting. So I get to there, and I go up the elevators and all that kind of stuff, and I'm just a country bumpkin from Saskatchewan. And so anyways, I get up to the board meeting, and everyone's in sort of the pre-room lobby area having coffee and donuts and networking and all that kind of stuff. And so I got my coffee, and this woman, I don't know, I guess she didn't have, this. Some people lack the sense that there's somebody next to them. I can tell when someone's behind me, right? So anyways, she decides to like go, whap! I don't know what happened to her, but she bangs right into me and spills my coffee on my shirt. That was my first board meeting. I'm like, son of a... But the second one was better. So... Lancaster King says, hey, talk about being born for greatness. You know what? No. I was in a town with one street light in rural Saskatchewan, middle of nowhere, culturally and socially isolated from the rest of the world. It was farm country. You could not have been any farther from Wall Street and George Soros than that. So in 1989, I think it was, I'm like, I have to get the hell out of here. And in 1994, I was elected to the board of directors of that nonprofit, and I helped run an organization of 3,000 people. So I went from basically arrived to the United States 1990. 1995, that's what I was doing. I got out of a town with one street light and no hope to that. But before that, there was a little NASA stuff going on. And so I said, I guess I'll be a businessman. And so I became a businessman. So anyways, there's my life. I don't know how we got on all that. but maybe it's just a Friday, casually hanging out with my friends. So looks like a lot of people have dropped off, so I've bored a lot of people, so I won't keep you any longer. Peace on earth. May the pips be with you. May our profits be above average. Remember, subscribe so that you get notified on Monday. Again, I'm going to do a COT training, Commitment to Traders Report training, so make sure you subscribe for that. Leave a like and comment. And have a wonderful weekend. If you're choosing a broker, please consider Trader's Way, because they make these webinars happen. So pay it back, huh? Peace on earth. May the pips be with you. May your profits be above average. And I will see you Monday. Have a wonderful weekend. Cheers.